Dear guests, I hope you're having a great time here at the Finance Magnates Pacific Summit. Please take your seats as we are about to start our next panel, Transformation in the APAC Trading Landscape and Beyond. Joining us on stage is Blewitt, CEO at Investment Trends, who will introduce his panel.
Thank you. Morning, everyone. Hopefully you can hear me. As you said, thanks for the introduction. I'm CEO of Investment Trends. I have the pleasure of leading that business globally. It's not an advert, but come and see us at stage number or booth number 13, and we'll tell you a little bit more about what we do. So look, I think as per the title, Transformation in the Asia-Pac Landscape, it's very much changing. The world is rapidly changing in the APAC, and the APAC trading landscape is actually no different to that. I've got an esteemed panel with me of fintech leaders and policymakers. In the next 40 minutes, we'll look to reflect on the factors driving that change in the APAC region, be that regulatory change, be that technological innovation, or be that the evolving trader needs. So, let me firstly start by introducing my esteemed speakers. Karin Setchell is General Manager, Product and Investment Solutions at CommSec, where she leads the team responsible for CommSec's product offering, and that includes Australian equities, international equities, derivatives, and investment lending. She's got about 20 years plus worth of experience, having held a number of positions across the Commonwealth Bank business, as well as KPMG and ASIC. So, welcome, Karin. Bit of audience participation, thank you. All right, secondly, in the middle, I've got Dr. Rhys Bollen. Rhys leads ASIC's digital asset team within the markets group. Be kind to him. He leads the team overseeing crypto and digital assets, very topical at the moment, including preparing for government's proposed law reform in this area. He's also responsible for ASIC's broader work on digital finance and tokenisation. Rhys has also held various executive senior leadership roles across ASIC, in the areas of both international market supervision, consumer protection, and strategy policy, to name a few. With a very long list of credentials, including a PhD in financial services regulation, it's great to have Rhys with us on the panel. Finally, I've got Michael Bogoevski. Michael's with CMC. He's led the Singapore operation previously for 5 years. He served as head of distribution for Asia-Pac and Canada, and currently Michael heads the institutional sales, where he's responsible for developing institutional division. Again, very well credentialed, over 25 years worth of experience. You wouldn't think the level of experience looking at the young faces in front of us is actually the case, but there's a huge amount of experience in front of us. So, in terms of the session today, I want to start with a bit of macro overview by way of context before we get into the discussion. So, in our research, we see trade numbers around the globe having remained fairly high post-COVID bubble. And whilst a number of those geographies are dropping off, most regions, in terms of trader numbers, are still significantly elevated versus the pre-COVID long-term average. That said, Australia has recently bucked the trend, and we've seen an uptick in trader numbers, both in terms of total trader numbers and new-to-market people. On the leveraged trading side, we see a different story. For a number of reasons, and despite the COVID peak, where we saw elevated trader numbers, effectively what we've then seen is a reversion to the norm, and in some regions, a little bit below. So, I was going to try to show you a chart. There we go. So, there's some of the trader numbers around the world, and then what we do see, if the clicker works, is globally, what this shows is the number of new to markets in various geography. So in the COVID period, we saw a lot of people coming into the market, and the proportion, and I think something's happened to the slide, but it's a good job I know what's on it. We've got around about 15% in the domestic market, which are actually now new to market. So, against that backdrop, and maybe to kick off proceedings, what I'd like to understand from our panel is what notable trends are they seeing in the online trading landscape, whether that be cash equities or leverage trading, across Australia and the broader region. I'm really interested to know from our panel, and I'll probably start with Karin, how are those trends shaping customer demands and the market? Karin, let's kick off with you.
Yes, thanks, Eric. Hi, everyone. So a couple of things. We thought, after COVID, where would the market land? What we've seen is still elevated levels. What we've actually seen is a really big seismic shift into the younger demographics. The millennials have really come in. When you think about, Australia and the housing affordability issue, it's actually quite hard to get to buy your first home, whereas it might have been a lot easier 20 years ago. So they are switching over to how do I invest and how do I invest to grow my wealth. What we've also seen is a lot smaller trade parcel sizes. Previously it was circa about over $10,000 is your first trade parcel size. That's now around the $1,500 to $2,000, really dipping in the toes to try and then actually to grow and expand. The other thing that we've seen is there has been a huge bunch of fin influencers, but also social media, and we are seeing that what the concept of trust and the concept of loyalty is not what they used to be. So I'm going to trust my TikTok, I'm going to trust my fin influencers, I'm going to trust household names like, your Nvidia or Tesla or Apple or Microsoft. And so we've also seen a really big shift into international trading. What we've seen on international trading also is, some of these stocks are really expensive. And so the concept of fractional share trading in the US stocks has also proliferated. Now, with that type of background, what we've also seen is there is an increasing demand for education. You don't go from a saver overnight to an investor. So what type of trading strategies or what type of, pocket-sized, bite-sized, snackable, research, can I actually, read through, can I actually see in the channels that I'm used to? So where does it feature on, TikTok or Facebook or, the social mediums that the younger generation is very much associated with? And increasingly, what we are seeing is, this shift to self-directed investors. They don't, the concept of trust, they don't trust, the big banks, the big research firms anymore. It's, I want to actually be able to read and look at research from a number of different avenues, and then I'll make my decision. And then with the smaller parcel sizes, that's how they get in.
Beautiful. Okay, look, that's a great perspective, and I think that covers a lot of the cash equity traders. I might, if I may now, Michael, throw over to you, because you've potentially got a different perspective, both in terms of B2B players, especially given the breadth of products, CFDs and others that you do within CMC. So love your perspective on what's happening.
Yeah, I can certainly speak about it from two perspectives. One is the premium retail space and also from the institutional space. I believe everything changed around the back end of 2022 when we saw the macro environment change with the bottom of interest rates, and also when we saw interest rates starting to rise. What you're seeing now in the crypto markets and gold markets is all about macro and liquidity from major central banks. And so it's probably been one of the best trading environments that we've ever seen, both from a multi-asset type trading that we're seeing from premium and also from institutional. So gold is probably one of our biggest products, I would say, in the Asian space, and it's all about US equities. For us, being in that space, both in stockbroking and also in the institutional space, has seen us in a really, really good position. As a broker nowadays, you have to have a multi-asset offering. I've met some old friends here today, and I think we've all sort of realised that you have to be in US equities, you have to have a really good gold price, and you have to be strong in index. So that's been the main trends, yeah.
Excellent. So it's kind of interesting. You mentioned crypto on the way through, said you need to be multi-asset, and you referenced those. CMC went launched with crypto on the platform a little while ago.
Yeah, we did. So we can certainly talk about it a lot today. In fact, Matt Lewis, who's the managing director of the business, he was always been a strong advocate of the asset class. We are strong believers of that asset class, not just purely from a speculative point of view, but also as an asset class of the future. We have been absolutely focused on having the highest form of regulation around it. We actually look forward to working with ASIC on this topic. And we're fully behind it and having the highest form of control systems with the JV partner that we have.
Excellent.
So,
So look, that becomes kind of interesting then, doesn't it? Because you've gone live with crypto and respect your engagement with ASIC to make sure you've got the right levels of controls. If we think about matters more broadly, Rhys, you can correct me if I've got my publications wrong, but report 778 was published by ASIC back end of last year, which specifically looked at online investing. But what it also did, from recollection, was talk about unregulated products, namely crypto, sitting on similar platforms as regulated products, and potentially giving the perception that it is actually regulated. So there was caution, and I think one of the case studies in that paper specifically talked around somebody reversing from that. CMC have kind of gone ahead with a huge amount of rigour. Rhys, love to bring you in. What's your perspective on where the market's at in terms of opportunities, in terms of regulation of crypto and or any other assets?
Yeah, that's a broad question, thank you. So if you want to start broad, one of the previous statistics was on the number of online investors. Karin mentioned investors and savers. All working age Australians and post-working age Australians are savers and investors in that broad sense, whether they are online trading or not. So it's only a small subset that are using online trading accounts on a daily or weekly or monthly basis, but everyone at the conference is an investor in one sense or another, and that is a unique aspect of the Australian system, how superannuation works. So we're interested in more generally making sure the saving investment system works. For those who want a more active trading experience, we want to make sure that it's fair and appropriate, but that's not for everybody, and that's why we have rules around target markets and things like that to make sure that those sorts of services are sold to the people for whom they're suited. And that's at a macro point, but also at a micro point when we're talking about new products and services, margin trading and crypto and the like. So we have expressed views publicly about online trading more generally, some of the neo-brokers and new services we've seen in the last little while. We've expressed a view publicly on mixing crypto and other services. So our position's out there, and each firm can then observe our position and decide what they want to do next and take whatever risks they want to take, I guess. I'll put it that way. So we have a view, and we'll continue to evolve that as the sector evolves. Crypto will be coming more into the regulated sector over the next couple of years, both because some products are already across that line of being a financial product, and others because there is some law reform proposed. So one way or another, the crypto sector will become part of the regulated sector, and we may update our commentary on things like mixed services. But for the moment, what's in that report is our position.
Excellent. So given what you've heard from Karin, Michael's perspective, what do you see as the impact of regulation to your businesses and the investors, traders that are out there?
Yeah, that's a really good question. CMC's always played in the high jurisdiction zones anyway, so we are more than accustomed to the highest form of regulation. I was being in Singapore for 5 years makes you pretty match fit for any form of regulation. We're also been covering off in Canada with IROC, so they have a really high form of oversight. And so it was up only until a couple of years ago where the UK and Australia caught up with the margin requirements of those countries. We are warm to it. The quicker it happens, the better for us. I actually believe that ASIC should not be concerned about CMC or people at our level. They should be worried about what they will discover when they do start looking under the hood of these current players, how many clients they have how they're getting accounts, you will need to probably double the manpower you have on hand to regulate that. But the quicker it happens, the better. Yeah.
Karin, regulation?
Regulation. Look, CommSec is a subsidiary of the largest bank in Australia, being the Commonwealth Bank of Australia. So it is no surprise that regulation is is part of our DNA. What I will say is we do hold ourselves to the highest standard. We've got over 41% of the market share on the retail, self-directed investors, 30% of frequent traders. And so with that type of market share, you've actually got to be really conscious of, what is the regulation? What is actually the emerging trends that are coming through? Like crypto is probably about 2-3 years old now, to be honest, and there's been a lot of evolution to that, but really looking ahead and preparing ourselves. We also service a lot of different segments, and so I think I think the way I'm seeing it is regulation will become a little bit more, how should I say, targeted towards the different segments because different retail protection is actually required for, wholesale and sophisticated, very, one stream versus, your mums and dads or even, kids, millennials.
Yeah. Yeah, look, I think it's an interesting one, and just maybe back to Rhys, because the European Securities Market Authority some time ago brought in some stricter regulations in relation to advertising. I think the Spanish regulator, the CNMV, brought in some even stricter ones in terms of, especially around sort of CFD margin type products. Do you see, Rhys, the need for us to go there? Because that's starting to clamp down on advertising, on incentives and all sorts of things. We're not there, we've got TMDs. What's your perspective around what's happening in the rest of the globe, and do you get a feel if it's coming here?
Yeah, so we do compare notes regularly with regulators from other jurisdictions, as you probably expect, and swap ideas. We've each got a slightly different arrangement, so we do have Team Ds in this space that is doing some work. That is still relatively new, and there'll be a couple of iterations yet before that is fully producing all of the good work that it's capable of producing. So there'll be a couple of rounds yet with regulated entities and distributors, and standards are rising over time, and will continue to be part of that. We do have product intervention powers we have used in the CFD space. There are some firms that have structured themselves within that, some that have structured themselves outside that. That's of continued interest to us. If we see other products that are producing high losses and high consumer harms, then we will respond as well. There are advertising restrictions in a number of jurisdictions on CFDs, various sorts of options, and crypto products as well. To go back to the previous topic, we're not proposing something along those lines yet, but we are interested in how advertising is consistent with DDO and target market determination. So firms that have a relatively moderate target market but have advertisements on the metro or the back of football players' jerseys and things like that, we've got to ask yourselves, is that consistent with your target market? So we'll be keeping an eye on that sort of thing.
Excellent. All right, spend a bit on regulation. I might just have a little bit of a swing round. We've been speaking mainly about leverage trading products there. I might just swing back round to Karin, because from a market share perspective, our research shows that CommSec is a dominant domestic player in the cash equities business. All up primary market share, namely people who use that entity as their primary broker, about 44% based on our last research. What's the secret of a good cash equities business?
A few things. Look, I think fair value exchange is really important. So at CommSec, what you see in terms of our pricing is what you get. There are no other hidden charges or costs. But it's also very important for us around education and really making sure that, investors are going in, whether they're new and starting through to the more sophisticated ones, that we have different education for them. I'm really pleased to highlight that we've, just won the CommSec Invest Podcast of the Year, which is a new podcast aimed at new investors. The other thing I think is really around technology. So we have seen a lot of scams and frauds and deep fake coming through. Recently, CommSec has integrated with the bank. So on the CBA app, you can now also trade domestic equities as well as CommSec Pocket. But that was also, with a view of, seamless experience for the customer, but also the protection that we can afford to our consumers, who every day there's, like 100, 200 new frauds or scams going through. So we really do believe in consumer protection, consumer education, and then that real seamless experience where education is actually in, to the language that they need it in without the finance jargons.
I might come back to that language in a second when we get down to some social media stuff, but just in terms of a good cash equities business, there's another one over there from a CMC perspective as well as a leverage trading perspective. What we tend to find across parts of our research is that one key thing that many traders of all experience want, and I'm sure including in this room as well, they actually want trading tips and insights. So whether that be 30-odd% domestically across all levels of experience, or our research across the globe shows that quite naturally, quite understandably, people want tips and insights. So noting, Michael, that your traders span a spectrum from cash equities all the way through to leverage trading in various shapes and sizes. I guess what we've seen of recent times is the unwinding of the yen carry trade. Some maybe even ask sort of, is it actually complete yet? What have you seen happening across your trading space and where do you see it going? And this isn't financial advice.
Yeah, so that, I speak a lot about this every month actually, either in an article. To me, it's all about liquidity, and you'll see me actually quoting that quite a bit. So the central banks are pumping the system right now. I follow a number of key macroeconomists at the moment who I think I've got finger on the pulse. Now, here's my prediction. This is going to go on for another year and a half, all the way to December, as long as the central banks keep us liquefied, liquidity through the commercial banking space. That means technology stocks and crypto are going much higher, well beyond the nosebleed levels that we think they are now. And the unfortunate thing is retail's trying to short this move, which is why it keeps on going higher. We are setting up obviously for a change that will be coming. We saw a glimpse of that 2 weeks ago when you see what leverage does the other way, where suddenly the whole world, both the Japanese were pulling money back into the country, and we also saw many commercial banks and hedge funds suddenly off kilter, and we saw a Volmageddon event where the VIX went to 50 plus. Now, to give you an idea what 50 plus is on the VIX, that's equivalent of COVID, and we saw that happen in one day. So it's coming. You just got to be trading a little bit longer and be positioned for when it changes, right? So yeah, that's my viewpoint.
No, that's good, and I think what that nicely does for us is give us a little bit of a segue. You've had an insight, wasn't advice from Michael, but what we tend to find across a lot of our research is that people go to somewhere where they trust, and what's really interesting is that in Hong Kong, where we've recently asked this question, we actually find that the Hong Kong trader will typically trust for information an influencer. About 30-odd% of the market there do. That number is almost twice as much trust as they will trust their bank or financial advisor. Don't have the number here in Australia yet, have it for you later on this year, hopefully. But against that backdrop and just sort of, pulling on that thread a little bit more, Rhys, how are you dealing with those sorts of things? And actually then, I'll notice to Karin and Michael, how are you dealing with that sort of educational material fairly succinctly? Rhys.
Yeah, so be curious what the stat is here, but I mean, we've got similar research, certainly for the younger generations, millennials and Gen Z getting a lot of them tell us they do research those who actively trade, but then we ask where they do the research, and it's on YouTube and things like that. So it's not the same place that their parents or clearly their grandparents did their research. So there is certainly a desire for information, desire for education, desire for guidance on how to approach their trading, but they're not necessarily getting it from a regulated person.
Yep.
So we have been active in that space as well. We have cautioned people who are running influencer type businesses in Australia and trying to trade off that and make a living off that. That's not fundamentally new to this era. People have been getting advice from all different places and from someone down at the pub and on this, next to them at a football game and things like that forever. It's just magnified. Your reach is greater online, and social media creates some different incentives and things like that. So look, it's an ongoing one. We're also trying to make sure our educational content is as relevant as it can be. Whether I can successfully compete with YouTube and TikTok, I don't know, but we are trying a little bit in that space as well, as are some other regulators
I
too.
can see you up there, it's good.
We'll see, we'll see.
Briefly, Karin, new media, new channels, no longer just the stuff going on email. Briefly, what's CommSec? And then Michael, what you're doing to account for the new mechanism of consumption of bite-sized informative information.
So yeah, look, I think if you're a new beginner, our podcast CommSec Invest is a 8-part series that teaches you what share trading is. But there's the podcast on market updates. We are in TikTok, we are in Facebook, we are going to the mediums. But it's also very important that we are providing the right information and actually changing it from very finance-heavy jargon to simple English.
Yeah, I think we're more on I can probably speak more from the premium retail side. CMC has always been very active in having desks related in all our countries. We're probably more focused on face-to-face and the human-to-human contact, where clients are coming to us and looking for ideas. We can only provide general advice, obviously within our boundaries. We definitely focus and distribute information that way. We obviously have a very large retail base. We have a number of new modules coming online with the release of a new platform. Can't talk too much about it. In fact, the product designer is in this room today. So yeah, we'll be releasing a lot more. We're thankful that we have people like CommSec and others who help us in educating the wider public. We need it. We need clients to stop shorting this market and learn that there's another way to trade. So yeah, we need more.
Excellent. All right, good. Now, I'm conscious of time. We've got a few more minutes. I know this panel could, with due respect, talk on for quite some time because there's a lot of good information there. Any questions from the audience at this stage? If there is, stick your hand up and we can get a microphone to you. If there isn't and you want a few minutes just to think about it until the microphone comes round, there's plenty more we can carry on with. Anything immediately there, or is that simply on notice for now? Simply on notice for now. All right, well, I guess a panel session wouldn't be a panel session these days without mentioning the two letters, which I'm surprised haven't yet been mentioned, namely AI. And I guess with the rise of AI and other technologies that we see, how are those sorts of trends, does the panel see, affect the shape of future trading, and what opportunities and or challenges do you see? Anyone can have a swing at that one.
Yeah, I'll start it off. So for me, AI is only a year old. It's probably been around much longer than that. So I've probably been using Grammarly for a couple of years. It's an AI program and I probably didn't even know what it was doing. I would say in the next 5 to 10 years, okay, here's the futurist part of me. I would say in 10 years' time, the current financial markets will not be the same. So latency arbitrage, will it be gone or will it be worse than it is today? So on the institutional side, and anyone who works in liquidity here knows exactly what I'm talking about. The whole game is trying to offset latency arbitrage from other players, smarter players than you might be. Perhaps with AI, we'll be able to stamp this out. you're going to have potentially from a people side. So you have developers, you have quant guys, and you have dealers. There'll be a future point in 10 years' time where that will be one machine covering what might have been 3 to 6 roles. And they'll be real-time adjusting spreads, forward analysing and predicting what that flow might be. Another thing what I'm actually looking at is whether Keynesian theory will actually be relevant anymore, because that's based on human assumptions, right? Human rationality. We will have machines that will be beyond the IQ of a human, that will be an IQ of 1 million. So what does that mean in the world going forward, right? So these are all really, really scary things, and I look forward to the regulator overseeing that, right? What a machine at 1 million IQ, and what do they do? What do financial markets look like in that realm? How do we power
the machine race? Who's got the better machine?
Yeah. So it's going to be mad. It's going to be mad.
Right.
So I'll be 60 at that time, and hopefully I'll still be working. And I think it's one of the greatest periods in financial history the next 10 years.
Now, if that hasn't stirred up any questions, start thinking about it. But I am going to go to Rhys off the back of that, because it's starting to sound like who's going to have the better machine. Where's it going, Rhys? What are you doing about it?
Yeah, so AI, or any new technology for that matter, is amoral. It's not. It's as used by the practitioner for good or for evil. So AI will increase some sorts of problems and solve other sorts of problems. AI is currently being used in trade surveillance and market surveillance to try to catch various sorts of misconduct earlier, and regulators are using it too. It's also being used to devise new scams that we haven't thought of yet, and other sorts of deep fakes that we haven't thought of yet. So it's a neutral technology. We are looking at how firms are using it, what the quality of their governance and due diligence is, how well do they understand the risks that they're bringing into their organisation by switching some of these tools on. We also, like any other large organisation, are working at how we best use this technology ourselves, how it will increase our efficiency, how we can use it to be more impactful than we are today across our various parts of our business, both internal efficiency but also regulatory efficiency. So we're in the same boat.
Thank you.
I think the key call out, and I won't say what the others have already said, but I think the other part that we probably need to factor in is, look at our economy. AI and computing and the computing tech, computes a lot of energy, so where are we going with our environmental policies? Do we actually have enough chips? Because that's a real problem that's staring at Australia at the moment, and so
A couple of companies make them whose stocks are going up currently.
Yeah. So I think whilst it will change the trading landscape, how you use it, and the ethics behind that, but it's also what does this actually change from a societal point of view?
Fantastic. All right. Before I come back to the panel, any thoughts arising from the audience? Want to pop your hand up? A burning question that you want to ask about anything that's been covered or anything else? Okay, all good. I will carry on. So we've got a few minutes left. Maybe I'll just seek some closing remarks from each of you on the trading landscape in the Asia-Pac region and or globally. Minute wrap up for each of you would be fantastic. Go on.
I would say CMC and client competitors in the liquidity space have probably been facing an excessive amount of gold trading, I would say. It's been just the standout product. It's leaps and bounds above any other product. I scratch my head sometimes trying to understand why. It's just one of those vehicles. Latency arbitrage is always a topic. Compliance is a topic. Right now, I'm really curious about the neobank space. CMC's just done a very big deal. It's a global deal, the largest one we've probably ever done in terms of span of audience. It's with Revolut. I'd like to see more of these type of deals, like even competitors starting to do joint ventures in this space. I'm really curious where this goes and whether this is really the rise of the neobanks getting into the banking space. So Revolut just got a banking license in the UK. Perhaps this is finally we're going to see some competition to the banks. Although at 54%, Karin, I think you're a bit higher in market share than 40. You're being very kind. I'm really excited to see where this goes. Yeah.
Fantastic. Rhys, your perspective of the future of the markets and regulation or participants?
Yeah, so I won't comment on sort of APAC more generally. I mean, our overall goals in the space haven't changed, but clearly there are new products, there are new providers, and existing providers are bringing new products and services into the system. We want to keep seeing that the competition is to serve customers well. We want to make sure that the competition is to have efficient capital markets that support the businesses that actually need to raise funds, to produce goods and services in the real economy. Online trading, leverage trading, crypto, that's not the right product for everybody, so we want to make sure that we're continuing to monitor that the right products and services are going to the right people, and as it continues to evolve, we will with it as well.
Brilliant. Karin, closing remarks.
Yeah, I think it's really important that we think about the customer, so, you know, and the customer's journey. If I look at one spectrum, there's going to be a big bunch of intergenerational wealth transfer because there's a lot of people in retirement and a lot of that superannuation money as well, and filtering down. And then on the other side is how do you really change, you know, everyone is a saver to Rhys's point, but not everyone is an investor and investing in different things. So how do we actually help people on that journey? And that's what CommSec's here to do.
Beautiful, and that spell isn't quite the end of the session. I will just do a quick wrap up and say, show your appreciation for our panel for sharing their insights today. Thank you, panel, well prepared. We've covered a lot across a fair amount of areas, from leverage trading to cash equities to customer to the future of AI. Hopefully that has been insightful for you. Thank you for your time and enjoy the rest of the conference. One more round of applause for the panel.